Hey guys, I'm going to do this video really quickly because I was watching somebody talk about this as it relates to the S&P 500 versus somebody putting money onto real estate. And I thought it was great, and I wanted to do the example for you guys myself, because it really hit home, as well as because a lot of people are like, hey, why don't I just leave my money in traditional investments, put my money in S&P 500 and wait, right? So, naturally, I'm going to do the line graph so we can kind of have something to kind of show you guys. So the example was, let's say, so real estate versus SP 500. My markers are going to run out, but I'll make sure to keep it simple. So if somebody put $1 million, right, in the S&P 500 for 15 years, or they bought real estate, here's what this would look like. So this graph from what on the thing, it was like this was the S&P 500 graph, but the real estate graph would actually do this, right? Starting off with 1 million at the end. And this is 1 million 1 year, all the way up to 15 years as an example. So 15 years as an example. And sorry about turning my back to you guys. I apologize, but I really wanted to kind of put this. So this was really the thing. So this would be somebody versus putting a million in real estate, or somebody putting $1 million in the S&P 500. They give $1 million to their advisor, and that person drops in an ETF. So this was really was interesting to me, and I wanted to share with my people who follow me, was if you were to take $1 million and you were to buy like a multifamily real estate, that $1 million would, I usually go $3 million, but in this example, we'll just use 4 million. So that $1 million will buy you $4 million worth of real estate right off the bat, right? So you're, and if you were to take $1 million and you were to put that in S&P 500, which is stocks, you would have $1 million worth of stock. So from if we were doing a line graph and this is started off in year one, right? You're already better off in year one with real estate than you would have been with your stocks, because $1 million worth of stocks, $1 million buys you $1 million worth of stocks. $1 million with good leverage on real estate, you can go and you can get debt and you can leverage and you can buy a $4 million piece of real estate. Now, let's say in year seven, because that's what would happen, right? So let's say you bought a $4 million piece of real estate. And for this example, let's just say this was 40 units, 40 units, $40 million, $44 million, 40 units. But in year seven, let's just say we had this deal, this is year 15. If we were to stick with the S&P 500, on the average, everyone says 8%. When we kind of look at it, it's a little bit more. So let's say closer to 10%. In 15 years, your $4 million in the S&P 500 might turn into, I'm sorry, your $1 million might turn into 4 million or 4.2 million. But with real estate, what would happen is I would get a loan for 15 years, a 15-year AM schedule on this thing, which means that in 15 years, my piece of real estate will be paid off. Here's the thing, in year seven, I'd go back to the lender, because by that time, especially with real estate, I would expect that my value of my real estate, by increasing the rents, I'll go through that in a second, would, let's just say, double. So in 7 years, let's look at my real estate would be worth 8 million, 8 million at the time. Right. So that's the target. So I would be like, hey, year seven, I already know that we would have refinanced my property, but I would have went back to the lender and said, hey, my $4 million deal is now worth 8 million. Can I get a loan? And in that situation, I probably would have taken out money. So let's say I would have taken out 8 million, let's say 4 million, right? So I would have taken out $4 million on a refinance. Can you guys see that? But stick with me here. So I would have taken out 4 million on a refinance, and I still own the property, right? So I'd refinance it, take out $4 million, still own the property, not including cash flow in this analogy or anything like that. But with this 4 million, what do we say? $4 million, another 4 million in cash flow, and that's a non-taxable event because that's a refinance, it, so that's financed as debt. I could turn around and, like we said, I would go buy what, a 12, let's just say, since we're sticking with that number, it's a $16 million deal now. Now I have a $16 million deal, right? That's a much bigger property to kind of look at. So I got a $16 million deal, and oh, by the way, I didn't sell my other deal that is now worth, what do we say it was worth? 8 million. 8 million. So now we have what, $24 million worth of real estate? Yep. So we have 24. $24 million worth of real estate. And now we have two assets here because now we bought another asset here, right? We bought one for 16 million, right? So now we have two deals. So during this timeline, 16, we have $16 million asset, and oh, by the way, we had a $4 million asset that is now worth eight. So when we get to this part, naturally during this time, I'm probably going to do the same thing. I'm going to go back to the lender and I'm going to borrow against this, and I'm going to say, okay, fine. Let's just say we can get out, I don't know, what do we got? This is probably going to double too. So we'll probably be at $32 million worth of real estate because if we're looking at another 7 years, let's just say that this is worth 32 million. This is worth 32. And this deal right here, let's say this one doubled again. This is worth 16 million. And this is not impossible to do, right? So the reason why I know that is so now we have what, $32 million worth of real estate in this situation. We have a $16 million deal. That's a $48 million worth of real estate over 15 years. And then if you just put your money in the stock market, you would only have $4 million worth of real estate if the stock market stayed at the average returns that it normally gets for the S&P 500. So that's why this is a lot easier because when I think about it from the we do it, we would have, what did I say, 30 from here, we'd have roughly about, if we stuck to that number, we'd have was that 16 and we doubled that. Yeah. Um 24 million dollars worth of real estate. I'm way off the side of the thing. We'd have 24 million in real estate, $24 million worth of real estate. That's RE, but we'd have $4 million worth of stocks. So 24 million would be here. Wow, I'm talking way away from the camera. Probably going to do this video again. But I wanted to kind of share that because if you were to do this at that 7 year mark, your real estate will probably doubled already and then get here, but you would already have a bigger portfolio of real estate. So your $1 million would probably turn into $24 million worth of real estate or more. And your $1 million in the stock market would probably only turn into $4 million worth of stock. And oh, by the way, if you try to sell this stock, it will cost you somewhere around 37% in taxes, depending on where you live at. And long-term capital gains, plus there's some other taxes that you would have to pay as you trade in and out of that, not including your federal and your state. So that's a huge thing. So if you have $4 million and you had to liquidate $4 million, it may cost you 40%, $1.6 million of that just to get rid of that. That's a lot. So just wanted to point that out to you guys. That's huge, but I wanted to share it with you because when I saw that, I was like, dude, if some, because I do have a lot of people like, what if I just put 1 million in the stock market? Yeah, you could, but if you were looking at the end-to-end value, your $1 million will turn into $24 million or $32 million worth of real estate versus only $4 million in the stock market. And I would take that one all day. All right, so I know I kind of went through some math and I was off to the side walking it, and I was also had my back turned to you guys. Sorry about that. But I wanted to share this quick analogy of what the difference of putting your money in real estate and the stock market and what your $1 million could control over the lifetime of that investment. All right, let's get after it today. Boom.